What's going on, everyone? So today we will be talking about my crypto trading strategy for this bull market for the 2025 bull run, guys. We're going to talk about that today. Remember, I'm not a financial advisor, none of this is financial advice, but let's get straight into it. So yep, we are going to talk about how I plan on getting rich inside of this bull cycle as well. We're going to talk about this, guys, but look at this. I talked about Bitcoin already earlier, and this kind of ties into what we're talking about today. So how does this tie into what we're talking about today, you might ask? Well, it ties into what we're talking about today because I trade chart patterns. That's the main strategy I use for trading. And these are the three main chart patterns that I'm always trading all the time, because charts mainly do these six patterns almost all the time. You don't see the rising wedge as much, but you see the falling wedge much more than the rising wedge. So, this is just something that you see. You're mainly always going to see symmetrical triangles in there. But the reason why we're talking about my crypto trading strategy for this bull run is because one of the community members, one of the channel members, has actually requested it. He says a video would be also very helpful in which you talk about your strategy, such as your portfolio ratio of Bitcoin to alts. When you exit a coin, if it is not successful, how many parts, and where you divide your portfolio into, and do you mostly trade or do you hold for the long term, even more than a year? So guys, if you become a member of the channel, it's only $9.99. Anyone who asks me to make a video on a specific topic, I'll make that video as long as it's not on some low cap scam coin. Right? If you want me to do a technical analysis on Ethereum, I'm on it. Ethereum Cat or Ethereum Classic, I'm on it. Litecoin, I'm on it. Any of them, I'm on it. Whatever coin you want me to do a technical analysis on, I'll do it. Go ahead and become a member of the channel. Only $9.99. I've made a lot of videos catered to the members on this channel, and I'll continue to make them. So guys, become a member. It's very, very cheap also. So shout out to the member here, Biblia. We are going to talk about my strategy. Then we're going to go through your questions one by one. But I did think that this is actually a very good topic. So shout out to you for that again. So let's talk about the strategy first with my portfolio. So what's my ratio of Bitcoin to alts? How do I plan on playing this? Well, me personally, I am a short-term trader, which means I don't really plan on holding and holding and holding. So actually currently right now, I hardly have any crypto because I'm of the premise that we're going to have a major pullback here. And I do believe that it's going to happen pretty soon. And we're kind of actively pulling back here. So I am expecting us to break below this chart pattern, because what do we have right here? I know we have all this other stuff and it's a little bit too much. And sometimes, things can be a little too much, right? Sometimes we can have too many chart patterns, just too many of everything, and it can get in the way. But what we have right here is currently a symmetrical triangle. And I mentioned to you guys, I mainly trade with these six chart patterns. So what do you see here? Well, you see a symmetrical triangle. Okay, cool. Well, what type of symmetrical triangle do you see here? So you could either play this as a descending triangle or a symmetrical triangle, but they're both bearish because it's coming from a downtrend. And reason why I said this could possibly be the descending is because you can straighten it out down here and you can be like, well, it hasn't pulled all the way back down yet. So when it does, then it's going to be a descending triangle when it does something like this. So, this is either a descending triangle or this is a symmetrical triangle, but they're both bearish. They're both bearish signals. So either a bearish descending triangle or a bearish symmetrical triangle. So I use a lot of these patterns when I'm trading. But yeah, I don't really care for Bitcoin to alt ratio. I feel like the Bitcoin to alt ratio and like diversifying your portfolio is more so for people who aren't traders. Like if you're not a trader and you're just doing this to invest and like you're just, buying to invest long term, then that's what you should be doing. But me personally, I'm a trader. I do short term. I'm in and out, in and out. But it says when you exit a coin, if it is not successful, how many parts do you divide your portfolio into? He says when you exit a coin, if it is not successful. So if a coin is not successful, when would I exit? that coin? That is a good question. You just have to set your stop loss, and it's going to be contingent on whatever coin you're doing. Like for instance, with this, let's say I wanted to let's say this is going to continue to drop down here. So I would probably end up trying to get in at 98K. But let's say I couldn't get in at 98K, I would try to get in at a different area. But let's say I'm already in. Let's say I'm already in right here and we're going through this pattern, and I bought somewhere up here and we're going through this pattern. If we break this pattern here and then we go below previous support levels, then I'm out. And what are previous support levels? You can look at them like this. Where are the last levels that we hit for support and resistance? Here, 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 and right above us a little bit as well. And you can see the same level was also hit here as an all-time high and also hit here as an all-time high. So look at previous highs and previous lows, and those will then become your support and your resistance levels. That's why I have all these white lines on here. I gotta bring back my charts, because as you can see, I kind of been changing up on everything out here. So yeah, as you guys can see though, that's pretty much my strategy there. And now the next question is, how many parts do you divide your portfolio? How many crypto coins? So I mean, it just depends. Again, if you're not a trader and you're just kind of investing, you're just buying for long term, and yeah, you probably want to be diversified. Have a handful, about 5 cryptos. But me personally, I like to keep 1 or 2 cryptos. Like I like to go all in on 1 or 2, which is not good, but it is good if you're trading and you're picking a good coin. So yeah, that's pretty much my strategy there. And he said, do you mostly trade or do you hold for the long term even more than a year? I mostly trade and I never hold for long term more than a year. So this is pretty much my strategy in a nutshell, and this is how I plan on getting rich inside of this bull market. So first of all, Pudgy Penguins. This is my plan. I plan on trading a bunch of cryptos, right? Not a bunch, 5. So I'm looking at Avantis, Aster, Pudgy Penguins, Toshi, and Pump.fun. With these 5 coins, in November, I'm looking for some type of bottom, right? Hopefully Bitcoin can bottom out by then. And by then, I'm looking for an entry point. Whatever coin I can get at the very cheapest price, consider it to their charts, then that is the coin I'm going to get in. So let's say Pudgy Penguins is at 0.00 or 0.024, but then we pull up something like Aster, and let's say Aster's even cheaper at 50 cents. And what I'm saying is cheaper relevant to their market cap, relevant to their previous highs. Whatever coin is cheaper relevant to their previous highs and their market cap and all that, that's the coin I'm going to go all in on leading into the bull market. So I still believe we're going to pull back. I explained this on my other videos, so I'm pretty much not going to do that. But just to kind of show you the premise of what I was talking about here, we're looking at 32% drops here every time we started the bull market. 2023 January 1st, 2023 we started the bull market, and as you can see at that first peak, at the first high, we pulled back 32% at the first all-time high that we passed. Pulled back 32%, traded within this channel, broke out, pulled back another 32% on the next all-time high, traded within this channel, broke out. Now we're at a new all-time high. Let's see if we pull back 32% and trade in this channel. Let's see if we do that. So yeah, that's pretty much what we're looking at. And then when we look at the percent R trend exhaustion, it's following the same steps here. So I'm expecting it to do the same exact thing here. It might not, it doesn't always have to do the same exact thing, but it's too much of a coincidence for it to not follow this pattern, guys. Too much of a coincidence. So anyways, we also have these candlestick patterns, these chart patterns that I also follow as well. So I like to look at these 6. You definitely want to know about the double tops, the bearish head and shoulders, the bearish rising wedge, the bearish expanding triangle, is something that a lot of people aren't paying attention with Bitcoin right now. I've been noticing that people are not paying attention to it. So let me show you. And some people might not notice it. I think it was actually a different one. It might have been Aster, not this. But it was something, a bearish expanding wedge right there. And then I was talking about that. And as you can see, I do these chart patterns on all my charts here. Like this one right here is an ascending triangle. Usually ascending triangles are bullish, but we just came into it from a downtrend. So this one could be bearish. So be careful on that ascending triangle. It could break out to the upside, but we came in through a downtrend. So it's supposed to be bullish, but we came in through a downtrend. So you got to remember that. And then triple top, you don't really see that too often. We kind of are seeing a triple top with Bitcoin. But it's, it's a little bit hard to tell, but look at this. I would call this a triple top, honestly. I would call it a triple top. Like for one, we've hit tops multiple times, twice over here, and then we hit it once there and once there. So we got it twice here, once here, once here. I don't know. I would call it a triple top, possibly. But yeah, we'll see. But yeah, definitely learn these as well. It will help you a whole lot if you learn these different chart patterns. So this is pretty much my strategy. Again, shout out to the subscriber for mentioning this, because it was a pretty good video title. It was a pretty good video idea and everything. So I definitely think this is going to be useful for some people. This is the Avantis chart right here, and as you can see, this is also an ascending triangle, but we came into it from a downtrend. So you can equate this same one to the one that we just now looked with Bitcoin, because you see we came in, or Aster, you see we came into it from a downtrend, and then we start going, and then we came out on a downtrend, because an ascending triangle is supposed to be bullish. But if we come in from a downtrend, then it's going to take the role of a descending triangle, even though it's not descending. So that's just a little tip right there. But yeah, I mean, that's pretty much my strategy here. Again, shout out to all the subscribers, shout out to all the holders back there. And if you guys want to know what I'm doing personally, again, Avantis, Aster, Pudgy Penguins, Toshi, and Pump.Fun. Those are my 5 top projects for this bull run. The one I'm most bullish with is Pudgy Penguins and Pump.Fun. Well, it's kind of hard to pick. Aster is pretty bullish. Avantis is pretty bullish. So I would say Pudgy Penguins I'm probably going to be the most bullish on. So my plans here, again, I'm doing all of this based off of the observation that Bitcoin is crashing and breaking down below its symmetrical triangle, which it's actively doing right now. And if we do that, and if we also do this 32% drop that we did back here, 32% drop with the channel that we had back here, we did both of those, and you can see the channel that we were in. But see, we broke out this channel to the upside because of Donald Trump and all the politics and all that. They manipulated the charts. So we were supposed to keep going down through this channel, but we broke out to the upside because of, market manipulation. And then we broke down because of market manipulation. And we were actually in a falling wedge before we broke down. But market manipulation made that falling wedge a bearish sign. But we all know that falling wedges are bullish. And we were in a falling wedge. And we were supposed to keep pumping from here, right? We were supposed to keep going. We were supposed to keep rising. But we did not because of market manipulation. So as you guys can see here, this was a falling wedge. This was supposed to break out to the upside. Supposed to. But again, we have market manipulators. So sometimes these patterns can be invalidated. That's why I'm saying be careful. Technically, we should break out to the downside because this is a bearish symmetrical triangle. Technically, we should be going down. Technically. But things aren't always technical. All right. Sometimes people manipulate prices. Okay. But again, let's head back to the Pudgy Penguins topic. If the next time we see Bitcoin going down to 85K, which is going to be a 32% drop, I don't know if it's actually going to do that. It might do way less. But if we're going to follow the last two times in 32% drop, 32% drop. Last time we were there was April 20th. So if you come over here and pull up Pudgy Penguins, and then you look at April 20th on Pudgy Penguins, you're going to get a price way down here. And that is going to put you at 0.005. So honestly, do I think Pudgy Penguins will go down to 0.005? I don't know. It's hard to say. But if it does, this is my trading strategy, and this is how I plan to get rich during this bull run. I plan to, if it goes that low, I'm putting $10,000 in at 0.005. This is why it's good to have some dry powder out there, guys. But $10,000 at 0.005 gives you 2 million coins, right? Whereas right now at current prices, $10,000 only gives you 417,000 coins. So at my target price, which is 10 cents, 417,000 coins only gives you $41,000. But off 10,000 to 41,000, that's pretty good. But with 2 million coins, which is 10,000 at 0.005, that's going to give you a whole of $200,000. So that is very significant. And Pudgy Penguins might not get that low. But if it does, I'm getting in at 0.005 and I'm riding it out until 2 million. So that's pretty much my strategy here. And if I can't get in Pudgy Penguins at its low, I'm looking to get in at the lows because it's all about timing. You want to get in at the cheapest price possible because it's all about timing. And that's only if you're a trader. If you're investing, you can dollar cost average and you'll be good. But me being a trader, I got to get in at the lows. So yeah, that's my plan. If Pudgy Penguin doesn't hit the lows, then I'll get in Aster at the lows. If Aster doesn't, I'll get in Advantage. If Advantage doesn't, Pump.Fun. If Pump.Fun doesn't, Toshi. If I can't get in those at the lows, I'm going to look at Doge and see if Doge has pumped yet. If I can't do that, I'm going to look at Chronos. If I can't do that, I'm going to look at Shiba Inu. If I can't do that, I'm going to start looking at other alternative options. I'm going to look at Linea. If I can't do that, I'm going to look at Fox. And I'm going to look at whatever I can get at the lows. I want to get something at the lows, something that hasn't pumped yet. Pudgy Penguins has done numbers, but I think I can get it even cheaper. So anyways, this is all I got for you guys today. Definitely hit the like button and subscribe. Remember, I'm not a financial advisor. None is financial advice. Leave a comment in the comment section. Definitely become a member of the channel because I'm giving out gems to the members of the channel out here. And also, guys, like, this is just, it's just $9.99 a month. And like, you'll literally make that money back very quickly. So definitely go ahead and check it out. And also, let's just speak hypothetically here. Let's hypothetically say that you want me to go over. I'm gonna just scroll and look for a random coin. Scroll, pick this coin. Oh, Gate.io. Okay. All right. So let's just say you wanted me to go over Gate.io, and I'll show you kind of what I do and what I'll be doing for the members. Let's say you wanted me to go over Gate.io. Then I would be making a video on Gate.io now. But as you can see, I've never done a technical analysis on Gate.io. I've never looked at it. Never looked at the charts. This is my first time looking at the charts for Gate.io. So what am I going to do first time here? I'm going to take it from the swing high to the swing low of the last or of this cycle. And the swing low of this cycle, you could say, is right down there. But no, I'm going to say it's all the way down here towards these lows. Like, that's what I would say right here. But, you could say whatever you want. But yeah, this is where I would say, and it's also where the highs of that level back there was in 2023. So now we have a Fibonacci. And then the next thing that I'm going to do is I'm going to find what I like to call micro and macro support and resistance levels. So what I'll do is I'll come in here. I'll look at all the charts. I'll look at everything for the charts here. And then from here, I'm going to look to, make some micro and macro support and resistance lines. So I take the horizontal line. I'm looking at areas where we've seen resistance. And really, there's not that many areas where we have had resistance, a little bit right there. And then I'll look for even smaller areas in here. But as you can see, it's pretty contingent on following the Fibonacci's here. So for something like Gate.io, it would be slightly easier for you to track because it likes to follow the Fibonacci's. Look at how the top of this candlestick wick hits here. and look at how the bottom of this one hits here. This is what we would call a little micro support. The macro one, I would just call it as the Fibonacci, right? So that's pretty much what I would be doing for you guys. And then we would also go over other stuff, like talking about how the MACD has all this selling pressure, and then could be getting some buying pressure coming back in for the MACD here. For this, the percent R trend exhaustion, the short-term trend is all the way down here at the bottom. So there is a possibility that the short-term trend could start taking off, but then the long-term trend could meet it, and then that could cause another drop. But a temporary rise in price is probably coming for Gate.io. So that's just kind of what I'm seeing here. And as you guys can see, I just picked a random project, right? I just picked a random project, shows you guys what I'm seeing. If you want a really short term, we have a micro. This is the real definition of a micro support. We've hit this support multiple times on the 15-minute time frame. So that is the actual micro support line. So technically speaking, when we get down to this, we might not bounce back up because we've already hit it so many times, but we will see what happens there. We got selling pressure on the MACD. We got the percent R trend exhaustion actively pulling back as well. So yeah, this thing is looking a little bit bearish, a little bit bearish, like Gate.io might want to crash or something. But yeah, that's pretty much how I do it here, guys. Very, very simple. And you can see this is an actual support. When you come back here, you can see this area as support. You can see it here all those times. We just now hit it there. I'm pretty sure we've hit it before. Yep. Pretty sure we've hit it before. It had resistance here before. So yeah, this is a micro support / resistance line. So yeah, guys, become a member of the channel and I'll go ahead and do any technical analysis for you guys, and I will break it down for you guys. Very, very simple. Won't overcomplicate things. And again, $9.99 a month, $9.99 a month. You'll probably make it back very quickly. But yeah, go ahead and do that. And remember, I'm not a financial advisor. None of this is financial advice. As always, I'll be back with another video.